Mortgage rates have been falling this year, and the big question is, should you take that next step and buy a home now, or wait a little longer for rates to drop even further? Should you start looking and putting in offers? We're going to answer those questions and break it down in this week's video right now. What's going on, you guys, and welcome back to the channel. Now, if you're new here, my name is Jared, and I post helpful biz tips and tricks every single Friday regarding personal finances, stock market, and real estate investments. If you learn anything from this video, please be sure to hit the subscribe button, and while you're at it, hit the notification bell as well so you get notified each and every Friday I post more relevant content for you. Let me know in the comments below if you're renting, living with your parents, or already own a home, and whether or not you're planning to take advantage of these rates by purchasing or refinancing. And also stick around till the end of this video where I will be giving you some quick money tips you can grab to stack some cash now that could help you with your down payment, closing costs, or renovations. Pack your bags, America. Mortgage rates have fallen to a new all-time low for the fourth time this year. The 30-year fixed mortgage rate averaged 3.13% for the week ending June 18th and down 8 basis points from a week earlier, which was reported last Thursday. Now, the previous record low was 3.15% back at the end of May, and if you recall last year, the 30-year home loan averaged 3.84%, which is a huge difference. And in other news as well, the 15-year fixed rate mortgage loan also dropped 4 points to an average of 2.56%. Freddie Mac's chief economist Sam Cater said in his report that mortgage rates have hit another record low due to declining inflationary pressures putting many home buyers in the buying mood, and who can really blame them, right, with such attractive low rates. Now, coronavirus cases may be on the rise in some parts of the country, but that hasn't stopped Americans from looking for homes to buy. A new study from Realtor.com shows that Americans are looking at a more pronounced interest in suburban and rural areas in the housing market as it recovers from the pandemic-induced shutdowns. Views of online home listings on May 2020 on Realtor.com grew by 13% compared to May 2019 for suburban zip codes, roughly double the rate of urban areas. Now, regardless of where the buyers live or they're currently looking to buy, interest in entering the property market in general just continues to grow. The number of people applying for mortgages used to purchase homes increased for the 9th consecutive week, hitting the highest level in over 11 years, according to data released by the Mortgage Bankers Association. They also say that mortgage applications increased 8% from 1 week earlier, according to that data. Now, let's sidestep for a second and talk about the Feds. Now, with the Federal Reserve planning to keep interest rates and controls around zero for that foreseeable future, will the Fed's actions push the rates lower or make them go higher? Now, the Fed controls short-term interest rates, so the policies don't directly impact mortgage rates because mortgage rates roughly track the direction of long-term bond yields, including the 10-year Treasury note. And that's something important to keep in mind as the weeks and months go by. We continue tracking the 10-year Treasury note and see whether or not that will have an impact and which way it's going and affect your next mortgage rate. Jerome Powell also said that the Fed will continue buying mortgage-backed securities, which will continue to pump liquidity into the market, which lenders will use to continue offering low rates to attract more borrowers. Now, the Fed claimed that it will buy $20 billion worth of treasuries and up to $22.5 billion in mortgage bonds to stimulate the economy. For now. The central bank's balance sheet has already topped $7 trillion, and former New York Fed President William Dudley thinks that it might hit $10 trillion before the Fed is actually done with all of this madness. And with all the extra stimulus, you can place a bet that he's probably right. So, should you go and rush out to buy a house right now? Well, wait, hold on, not so fast. Let's see if you can actually get that low rate first. Nearly 3 million borrowers have delayed their mortgage payment through COVID-19 related forbearance plans, and that in turn leaves lenders with less money to make new loans. Tighter credit standards also imposed by lenders are further likely to slow home sales, which are already under strain from stay-at-home orders and mounting job losses. So there's a little bit of a catch-22 here. The rates are also lower than ever, but a bunch of people no longer qualify for those loans. Now, MortgageReports.com made a chart showing the past mortgage rate trends plus their predictions for the next 90 days based on the current events and forecasts of 2020 from major housing authorities. They say that sub-3 average mortgage rates will be in our near future, but the reason they're not here yet is because, number one, lenders can't handle that type of volume currently, and number two, investors aren't buying the mortgages at the expected rates. Now, typically, investors buy mortgages as a safe haven investment when the stock market is tanking, but investors are hesitant because they are afraid that homeowners will refinance again, eliminating their earned interest and also they're fearful of forbearance as coronavirus threatens jobs and people's businesses. Most of the big U.S. lenders, Bank of America, Wells Fargo, and Chase, and some other ones are artificially keeping the rates high, especially on refinance transactions. Now, if you look at the screen here, Wells Fargo is advertising a 3.5 on a 30-year fixed rate for refinancing, but giving a lower interest rate on purchasing. So, what's going on here? Well, what's going on here is there's simply too much demand for refinances at the moment, and also new refi applicants could refinance again in a few months as rates drop. That means that banks and investors could lose their money on these new loans. But this is where the non-bank lenders could put price pressure on the big guys offering super low interest rates. There's also a nice chart here that shows the predictions of some of the major players, basically all of them averaging out to a rate in the low threes. So let's finally answer this question. Should you go buy a house now? Well, if you still have your job, you have enough for a down payment, and you still have awesome credit, you should definitely go for it. But heed these warnings because these are your mortgage strategies for the near future. Apply early, especially if you're refinancing. Now, most homeowners were caught off guard during the last time the rates plummeted. They had to scramble to apply to lock in rates in hopes of capturing that ultra low interest rate that was only around for a few days. And also make sure you submit all the necessary documentation like pay stubs, W-2s, and bank statements early. For all my refinancers out there, don't order an appraisal just yet because when the rates take that big dip, contact your lender and lock that in first. Then grant permission for the lender to order the appraisal, which will save you some money. Also expect a tougher approval. Lenders have raised their credit score minimums and discontinued certain loan programs. Even some have halted FHA lending. Attempt to make your loan file as vanilla as possible by paying off debts, raising your credit score, and also getting your loan amount down to a conforming level, which are published by the Federal Housing Finance Agency. Hopefully these tips helped you and you've made it to the end of the video. So as promised, I'm going to give you a couple of free money tips that you can implement today to start earning some fast cash and put it in your pocket right now. Now, if you're looking to invest and you have not invested already, now is a great time to get into the market and experience fluctuations that can get you massive gains. You can do this and also get 2 free stocks by signing up with the referral link down below to Webull. This will get you 2 free stocks valued up to $1,400. All you simply got to do is click that link below, open your Webull account, and deposit your $100 in there. You don't even have to spend it. Once you do that, you will get 2 free stocks and you will be able to cash them out for quick, fast cash, or you can hold them and let them gain more money on the market. This is also a great way for you to get fast cash, but also this is a way for you to go ahead and attain more wealth and get more assets. Remember, you want to spend your things on things that make you money and not spend your money on things that will not yield any results for you. So make sure if you haven't invested already, go ahead and check out that link below. You're also helping me out by getting me 1 free stock as well by being able to help you. The second way you can get fast cash now is open up a certificate of deposit. You can do this for as little as an 11-month no penalty certificate of deposit or all the way up to a 5-year certificate of deposit. This is basically getting more money than your average bank account and it's basically risk-free. This is great for you if you have a large down payment that you want to get more money on, but you're not willing to risk it in places like the stock market. Now, if you got some months in between buying your next home or buying your first home, this is a great way for you to accumulate more money on that balance of your down payment. And with that being said, when it comes to you getting an appraiser for $400 to $500, you can essentially get that done for free by just having a certificate of deposit through compounding interest, and you can use that money once you're ready to pull the trigger on that house, use that extra interest, and pay for that appraiser. There's so many different ways to get free money during this time and not have to rely on a stimulus check or rely on the government to help you get money in your pocket and attain wealth. If you want to learn about those things, make sure you hit the subscribe button and hit the notification bell so you get notified each and every Friday I post more relevant content for you. Give this video a thumbs up for my YouTube algorithm and also leave me a comment down below. Let me know what you thought about the video. You can find me on Twitter where I talk about stocks and real estate daily. And you can also find me on Instagram. Say hello to me if you're on that platform as well. Listen, guys, if you want to learn more about investing in your health and your wealth, you are in a great place to learn how to do so. You can join me here every single Friday. Make sure you leave me a comment where I can address your answers personally or get back to you about any videos that you might want to see in the future. Make sure you're taking care of yourself during this time. Stay safe out there, you guys, and I'll see you guys next time. Join me next Friday with more awesome content just like this video, and I will see you next time.